Tuesday, January 17th, 2023, Monaco 64, home of alternative economics and contrarian views. Today, we're going to look at Zoltan's commodity encumbrance and the challenge to Pax Americana. Recently, Zoltan Pozsar, an analyst at Credit Suisse, wrote about how war disrupts the movements and the supply of commodities. We have seen this disruption, of course, with the war in the Ukraine, and the result of it has been sanctions from the West imposed on Russia, and that has resulted in Russia cutting off the supply of oil and gas and other commodities by demanding payment in rubles. So we're starting to realize in the West that we have become or have been too dependent on Russia for our natural resources. We have also felt and seen how this situation has exacerbated the cost of living crisis, not just in North America, but especially in Western Europe. We are now all too familiar with the energy crisis, the rising food prices, fertilizer shortages, etc., etc. Apart from the supply chain disruption of commodities, we're starting to see a split, geopolitical split in the world from a unipolar globalization, a system-based world into a multipolar world. Zoltan calls the new bloc the G7 of the East, or he also mentions BRIC expansion. Some would call it as well the Global South. I'm not trying to take sides here, but just trying to analyze what this split or this challenge to the Pax Americana, the post-World War II environment that we've lived in, how that will impact our economies in the West. The West's reaction, i.e. sanctions and freezing of reserves, has made a lot of countries in the Global South realize that they have to look after their own interests. This will mean protecting their access to resources, and we've seen recently, back in December of 2022, that China, Saudi Arabia, and their partners in the GCC signed an agreement to safeguard the sale of gas and oil to China, and for China to access those oil and gas supplies in the yuan, or what's now called the petro yuan. So it's not just Russia's resources that have been cut off, but potentially we could see this G7 of the East and the Global South form a formidable bloc that could threaten the access to resources by the West and its allies. So with that in mind, today I've partnered with Traction Uranium. But before we look at the company, we're going to look at the uranium market and the nuclear energy market as well. Just like oil and gas, uranium is becoming a closed energy market. Did you know that almost 20% of U.S. household electricity is generated by nuclear energy? We're also seeing nations that were dead set against nuclear energy proliferation now leaning towards nuclear-friendly initiatives, especially in Europe. Finland, for example, has recently started up its first nuclear reactor in 40 years. The United Kingdom has recently announced that it plans to increase nuclear capacity from 7 gigawatts to 24 gigawatts by 2050. Even Germany and its government now is considering restarting nuclear reactors as the supply of gas from Russia is not certain anymore, and the energy crisis continues to ratchet up in Germany. And even the Netherlands, for example, plans to build 2 nuclear reactors in the coming years. Whatever you might think of ESG and the net zero movement, it is clear that the move towards clean energy and renewables is something that cannot be stopped. There's political consensus on both sides of the aisle in the West, and even the G7 of the East, and especially in China, they're moving towards that kind of policy. Here's a look at the number of new planned nuclear reactor additions worldwide as of May 2021. Uranium is a zero-emission clean energy source, and nuclear energy produces minimal waste. So growing the uranium supply, especially in the West, is more important than ever, seeing that there's a supply deficit of about 50 million pounds. Meanwhile, in the US, the difficulty of meeting clean energy goals and surging electricity demands are spurring a growing number of political leaders to take a fresh look at nuclear power. Clearly, the uranium market will benefit from big dollar government initiatives. Really, the US and other nations have no choice except to adopt nuclear power as a fuel source. More than 130 countries have now set or are considering a policy target of reducing emissions to net zero, including China by 2060 and the US by 2030. Experts predict that solar and wind can only meet 70% of the world's energy demand, so there's a huge gap to fill there for nuclear. So now back to Traction Uranium, and as I said, the ticker is TRCTF. The stock is traded on the OTC market. This is a venture company, so it's a high risk, high reward opportunity. So you should weigh the risk of adding that company to your portfolio. And before I go any further as well, I like to say that this report is for informational purposes only, and that it does not constitute financial advice. TRCTF is an exploration stage uranium company based in the Athabasca Basin in Canada. Canada, of course, has become an even more important partner for the United States ever since the developments in the Ukraine and the move towards a unipolar world, I would say. You would want to deal more with Canada than with Russia and its allies, of course. 15% of the world's uranium production comes from the Athabasca Basin in Canada, so that's how important this region is. So these are the company's main projects in the Athabasca Basin: Key Lake South, Hart Bay, and Lazy Edward Bay. Botan, the company's technical advisor, was instrumental in the 1975 discovery of the Key Lake uranium deposit in Saskatchewan. As the chief geologist, he was in charge of the delineation drilling of the deposits with reserves of 200 million pounds. Cameco's Key Lake is known as the leading source of high-grade uranium with a purity of 20 times the international average. Traction's Key Lake South project is only 5 kilometers away from Cameco's mill. Traction also employs a novel uranium vectoring technology for their field programs, pioneered by their award-winning research geologist and technical advisor, Dr. Yuanming Pan. Traction also has institutional shareholders like Sprott Capital, Canaccord Genuity, and Research Capital. Founders and strategic partners own another 55% of the company, so it's a very closely and tightly held company. Traction will soon start a new drilling program, and there's a lot riding on the results. Uranium Properties nearby, joint ventured with a company, have recently made some very good discoveries that have led to a 500% increase in the stock price of that company. So the game plan or strategy for the next year or so is to take a 500 to 600% profit, or to limit your losses. That's how a venture opportunity works. I suggest you do your due diligence before considering an investment. The company's ticker again is TRCTF. It's traded on the OTC market, and there's a link to their website below in the description. And with that, I wish you all a great rest of the day. Take care. Bye.